Good morning, everybody. Welcome to the second episode of the 2021 webinar series here at CG Cyber. We are going to be discussing cyber insurance in all its various forms and implementations. Joining me today are Dan Hyde. Professor Dan Hyde is a partner at the City of London HCR Law Practice. He's a visiting professor of law at Queen Mary, University of London, and an ambassador for the Judge School of Business in Cambridge. Importantly for this, a member of the Foils Technology and Cyber Liability sector group. So examining exactly the issues we're here to talk to us about today. And secondly, Emma Humphrey, who has worked in intelligence previously in open source investigations, has retrained as a solicitor and is looking at the effect on data risk that the pandemic has brought to all of us, which is quite close to what C2 is also doing in terms of the supply chain. So thank you both for joining us. The first theme that I'd like to pick up today actually is the ransomware scourge that we seem to be going through. So even in the last 6 months, it's either become a lot more reportable, people are reporting it a lot more, know what they're seeing, or it is happening a lot more. And I'm not sure we're actually at the bottom of that, given that companies don't always have to report these things. But the most recent one that I think we've seen is the Sordina Kibi attack on JBS, the meat packing plant in the US. And what's interesting for me is that the effect that has had in a cyber ransomware way is the same as the effect that COVID and the pandemic had last year, which was to cease production. And therefore, there's an anticipation that prices for meat products might rise. I'd like to cover that off later, and it's interesting that it's the same group that took the credit for the Washington DC police force and some others earlier on this year, just in 2021, and that's just in one piece of the world. Firstly, though, if I might hand over to Dan, who's been on the journey inside cyber insurance for a lot longer. Dan, would you mind giving us a bit of a précis of that?
Yeah, thank you, Jonathan. I'll certainly try. So I'd say cyber insurance isn't brand new. It's still in its infancy, and it's still some way, I'd say, from completing its evolutionary journey. It's true that all the way back in the 1990s, cyber insurance was developed as a bolt-on, a sort of add-on to existing liability cover. But that was essentially an American development, and it was restricted mainly to companies operating in the tech, media, and telecoms industries. It wasn't until around 2010 and beyond that in the United States, there was a growing appreciation of cyber risks, and with it, the demand for cyber insurance products that led to standalone policies being then rolled out. So it's clear that in the US, at least, it was becoming the case that cybercrime was so prevalent and sector agnostic that a more comprehensive cyber-centric policy was needed. That risk meant that businesses there realized that they operated in glass houses. We all know the saying about people that live in glass houses. People that live in glass houses should take out insurance. And yet the UK seemed well behind that US curve when it came to that appreciation of cybercrime, cyber risk, or cyber insurance. And I can personally attest to that, Jonathan, because in the early noughties, I approached publishers with an idea then for a book about cyber risk and cyber security law. And I was told quite flatly that there wasn't enough interest in the UK in cybercrime, and therefore, it wasn't a viable proposition for a
Really?
book. At that stage.
Even in the noughties.
And that verdict, thankfully, was short-lived because there was then a string of high-profile, high-value cyber attacks that began to push cybersecurity, up the queue, if you like. So there was suddenly a demand or a need for cyber insurance, and by I think 2014. A year when I think globally over 1 billion personal data records were compromised by attacks. I was then called back in by publishers to write the book, and was summoned by insurance companies to help explain to them, the particular cyber risks and examine how they might meet consumer demand and provide cover that was affordable but commercial for both the consumer and the insurer.
Do you think, Dan, do you think that's when the views started to change, that you could take the policy out, but they weren't famous for actually recompensing the insured? And actually the dial started to move now, and that payments are starting to be seen, and there's considerable payments as well.
Oh, no, John, so I have to admit, so you're right, because back then I'd had little experience of insurers, and I quickly came to realize that they weren't just interested in, if you like, in the various types of cyber attack, but also what vitally they might be able to cover or exclude, whether in express or less express language. There's a great poem actually that sums this up quite well, and it runs, there was a very cautious man who never laughed or played. He never risked, he never tried, he never sang or prayed. And when one day he passed away, his insurance was denied. For since he never really lived, they claim he never really died. Now, everyone that isn't in the insurance industry is sat there smiling, but there's a grain of truth, I think, in that poem that reveals a problem that's yet to go away. Because for insurers, both back then and today, the real concern is that cyber risk is so difficult to hedge.
We're seeing that. We're seeing that here in conversations with insurers and brokers and the underwriters themselves, that getting to grips with the security maturity of the insured risk or the potential insured risk is critical, because companies, particularly the ones like glass houses, they're very different. Some of them take it very seriously and some of them don't. But if you're applying for insurance online, for example, or talking to a broker, how do they tell whether you're actually quite good at protecting yourself or not? It's interesting. I wonder if I might ask Emma, where does that leave us now? So we're in 2021, ransomware is endemic. And one of the key things that all of these actors in the market are looking for is our personal data. Because they're run like businesses, right? We all think about these criminals in the form of the Hollywood movies, but actually they're run out of offices, and they're like businesses themselves. So where do we go now?
Absolutely. To answer your question very shortly, we're in a unique situation now. Dan mentioned before that it used to be the case that technology and data-centric businesses were a species of their own, and insurers classed them as such. Now we're all data species, every business, large and small. Likewise, we've all been thrown into the pandemic together. It meant a lot of changes, and one of the biggest changes was the overnight change away from our on-site comfort, the blanket of the security that we had set up and used for many, many years. Overnight, we had to change to a disparate remote workforce. Often cloud storage was being used, and we weren't quite comfortable with that. That meant we were very vulnerable to the likes of the ransomware attacks. We weren't adequately trained to use this new mode of working, and we simply couldn't react quick enough. We did what we had to do in the situation, but it wasn't enough. And that's why we're seeing such a rapid incline in the amount and sophistication of attacks. We are bigger targets because of the way we're now laid out as a result of the pandemic.
So, and we moved straight away into this remote working thing. And a lot of the, particularly the financial institutions, where one of their methods of control for their data was not giving people laptops, it was desktops and thou shalt work in an office. When that became illegal for a period of time, all the IT departments went out and tried to buy 4,000 laptops on the same day, and obviously that didn't work. So they go home, they start using their home IT that may or may not have malware and different pieces on it to do their day jobs, and they're trying to keep the wheels going rather than doing anything nefarious. But 19% of the breaches that we see are due to cloud misconfiguration and leaky buckets in Amazon and so on. So, and all of a sudden everyone's working at home, and the only thing gluing it together is that misconfigured cloud. That's causing a few issues, isn't it?
It absolutely is. And I mean, to throw out a figure that sort of puts this all in context, on average for a leak or an attack to become apparent, it's 272 days. So really speaking, we're still coming out of the honeymoon period, where actually a lot of the attacks that have already occurred, we aren't feeling the damage from them just yet. And the ICO are also operating a little bit of a grace period, where they understand that we've been forced into the situation. Things aren't as we would like, and it's not the standard that we would expect. But that won't last forever, nor will the pandemic itself. So there's going to be a great deal of scrutiny put on how we've adopted to this flexible working. To say that it won't be retrospective, I think, would be fairly naive. I think, there will be an analysis of how you reacted. And if the attack happened during the pandemic time, if it's then scrutinized outside of that pandemic context, the result could be quite harsh on those who were doing their best at the time, as you've mentioned. At the same time, we have to remember that, data was the lifeblood that kept business continuity. It fed us, it kept us going. It's how we did everything because it's all we had. We were a remote workforce and our customers were remote. Looking at the financial institutions in particular, apps were one of the only ways that any sort of financial transaction could occur. And that's really important because it meant the amount of data that was collected and is vulnerable within this new model of working is a big, big risk to businesses, a huge risk, and one that perhaps, like we mentioned, was sort of set aside for that special category of business that focused on data. We all had to.
So now it's everybody. Yeah, and the I think the regulator point is interesting because although there is a bit of a grace period, and that's both bandwidth on their side to address cases, on our side we need to keep businesses running, but it is 18 months in now, roughly. So we're in June, and the speed at which IT moves, 18 months is a long time. Chucking out free malware licenses doesn't take that long, even if you're on your home IT still. So Dan, what do you think is happening in the market where it comes to the insurers looking more cautiously at their insured risks, even if we are still working from home?
Yeah, I mean, just to pick up on the remote working point, because I think there's two parts to that. There's the part about, if you like, the IT or the tech in terms of the added protection, but there's also the really big problem of culture. Because, outside of the office where you don't have the same face-to-face cues, you don't have the same level of supervision, people are much more likely to take risks. They behave differently. It's not just perhaps using personal devices. It can be having indiscreet conversations in a cafe or all manner of stuff. So the whole risk, rises very, very, very steeply. And you also mentioned, for example, cloud computing. I think that's really important because from an insurance perspective, there's a great fear, if you like, of aggregation. That's because a single cyber attack has the potential to cause vast cumulative losses. So cloud computing is one example of that, where a single event, such as a successful attack against a cloud host, could cause hundreds of thousands of parties, lost by exposing large swathes of data in the cloud. So from an insurance perspective, they've got to avoid this tidal wave of aggregation of losses, whilst at the same time trying to do enough, to meet market demand and to make premiums affordable. So it's tough, and there has to be work on both sides, I think. I mean, certainly, if you're a business, you have to look long and hard and make sure, as you said, the ICO was saying, because we've had the pandemic, doesn't mean that mitigates any mistakes on your part. We expect the same standards, regardless of you. So that's the thing. I think if for a business who's listening to this, they have to look at how they protect themselves, and part of their, if you like, protective kit would also be looking at insurance, because if all else fails, do they have insurance or sufficient cover? And that's another problem again
as well.
Exactly. And I mean, just on that paying out, because it's important. One of the things I discovered when I worked with insurance companies was how important language was. So, for example, when I was asked to look at how I might draft things such as words such as loss, risk, event, originating cause. That was really, with an eye on making sure that we avoided these kind of aggregation of losses. And also because it was quite a novel area, there wasn't any standardized language, within the industry. And I think that's still the case. So one of the things I'd say with the cyber insurance policies, maybe you have to scrutinize it very carefully as well, because it isn't necessarily the case, that one size fits all, that you have this kind of standardized language that runs through it, and everything from kind of, notification obligations, trigger events, all of those really important key terms would have to be checked. And
and become more industry standard, because I think there's still an element of people feeling their way through this and how each one does it? Your focus group presumably is trying to pull together some of those standard terms so that people understand what they're buying or which level of cover they're anticipating.
Yeah, I mean, so again, in terms of that, you'll find, I mean, this is just a general overview, but when you have those policies, obviously you have those risks that are very clearly defined. So, these are the risks that we're definitely prepared to cover. And then we've got other risks that we say, okay, we're definitely not going to cover those. So they're clearly excluded. But then in between, you've got this whole grey area, which we may come on to, which is quite neatly called silent cyber. And that's a bit like the poem where, you think you've died, but the insurance company actually says you haven't because the policy's not, it's just silent, or as the insurers like to say, it's non-affirmative. So it neither confirms or denies whether there's any cover. So
proof required.
Okay. I mean, so people don't go into a complete panic. I mean, it tends to be that with sort of cyber-specific, what we call, standalone policies, that's less likely because the parameters of cover are usually more obvious. But certainly in other types of more traditional policy where it may have cyber elements included, that's where you then get into this grey area where you really have to be very careful to make sure that you've even got the cover that you think you've got.
No, it's interesting.
Sorry, the importance of grey areas is absolutely exemplified with the business interruption insurance saga. Mm-hmm. It took the FCA to challenge those grey areas within a whole host of policies for anyone to have any sort of clarity. And truth be told, we're still not there. And what we don't want to happen, but is a very real possibility, is this saga then being replaced with business interruption with cyber in the coming years.
Okay, so I'm going to take us back one step from silent risk in cyber because I think it's important for us to cover off the bit that seems to cause a lot of these problems. The cloud buckets don't misconfigure themselves. I think we probably agree. There's usually a human in the loop misconfiguring things before they deploy them. So how, and if I can ask Emma, particularly on the OSINT side, with people spraying their data out all over the place for everyone to consume, the human error side is often prevalent in these, and they've left the back door open. In one case where we went to look at a company that was delivering a security product into one of our clients, it was an exceptionally good product. They quite literally left the back door open because their server room was too hot. And so I just sauntered into the building. Now, is that a cyber risk? Is that a physical risk? I was invited, so I wasn't breaking and entering, but they'd left the door open all the way to their actual racks. And so the human error is something I'd appreciate a bit of a chat about. Can I ask Emma to lead on that for a second?
Absolutely. Human error is a huge problem. We all build these digital fortresses. We're very good at it in the UK. It's been described as the jewel in the economy of the UK, our mature cyber market. But one problem is that we build these fortresses and then we tend to invite a Trojan horse in. By that, I mean we salary the attacker. So be they an insider who's motivated to harm your business, as was the case of Andrew Skelton and Morrison's, or be they someone, as Dan mentioned, who just wasn't trained, or their standards have slightly slipped because they're under less supervision, they pose exactly the same risk, if not more, to your business than cyber attackers do. And they are more likely to be the reason that you fall foul of an attack. Now, the reason I mention Andrew Skelton is Morrison's were subject to a huge claim very, very recently, as of last year. And they were actually absolved of liability for one very specific reason. They were able to prove that he was a motivated attacker. Now, on the balance of things, that's very, very difficult to do. And it was only because Mr. Skelton took very proactive, overt steps, such as buying phony SIM cards or having burn phones and things like that. Most of your employees won't intend to cause one of these accidents, or if they do, they will be slightly more discreet about how they went about it, such as the back door that you've just mentioned. And that really matters for your insurance company, because there will almost certainly be a clause that says, due to your own negligence or contributory negligence, your claim will be partially or wholly rejected. And that really puts the onus on employers to really manage and have in place things like access controls and proper protection of your passwords and the passwords across the workforce. It really, really is important that you don't just focus on servers, etc., that you focus on the humans too. They are your weakest point.
And you need to be able to prove it. So it's sort of like a pen test. Pen test deals with your software and so on. But the other processes, or the control domains, if we were going to get really boring and talk about ISOs and things, they're the areas that people often don't focus on. So if I could ask a question before we start talking about silent cyber risk again, how do you prove it? Because if you're going into the cyber insurance market and you need a policy and you want to insure against a particular thing, how do you prove to the insurance company that you are at a given state? Because Cyber Essentials, for example, in the UK achieves a bar, but it's not that high, and it's self-certification, essentially. You fill out the form, someone checks the form and gives you the certificate, but they don't actually know that you filled the form out correctly. And so as long as you've got all the green boxes, you get a certificate. At what point does the bar need to be raised? And what some of the conversations that we're having from C2 into the insurance companies are about how you assess potential customers and their insured risk.
It's an area we do a great deal of work in, actually. Businesses are more than ever alive to the fact that they are processing more data than ever, and that it comes with a higher value than ever, and that their people are the greatest risk. Quite often what you can do is foster a positive culture. And by that, I don't mean monitor excessively your employees, but there are tools to monitor things like logging in, Pronet, for example, through to just good management, your training courses and how you manage a disparate workforce and how you've adapted. Those are all things that you can show, be it through courses and accreditation or just being open and honest with your insurer. And that's the kind of information that later you might come back to rely on to show that I was in fact not negligent. This couldn't have been prevented by any of my own actions. I took all reasonable steps. Should the worst happen and you go to court, that's exactly the kind of information that a judge would be hoping to hear from you as a defendant, that you really couldn't have stopped this. And the more hurdles that you put in place for a malicious attacker, especially, the more you're able to evidence how determined and motivated that individual was. So in the case of Mr. Skelton, he had to physically overcome quite sophisticated mechanisms that Morrison's had in place. I mean, that in itself is evidence that he was motivated. It wasn't human error. And that's the kind of thing that you're going to be hoping to pull out should you fall foul of any of the regulations.
To prove it.
Yeah,
there was a case year before last, I think, Norsk Hydro, who I think it was a ransomware attack, but I'd need to check my notes. And their insurance paid out just 10% of the value based on inability to prove the measures taken, I think. And that's quite an interesting one because that was actually their US business rather than anything over in Europe. So, Dan, do you have a view on the presentational mechanism that could be used to best effect?
Well, one thing I was just going to add to that, look, I agree. I think Emma's covered the points quite well, but it is made harder by remote or hybrid working. I mean, so to take the example of the bad actor, if you have the bad actor in a building, in an office setting, and he, let's say, steals or attempts to steal, or you can, ideally, if you've got the right security in place, maybe catch him before he's out of the building. But if he's already outside the building, it becomes much more difficult. And also, the cases where, for example, you may assume it's human error, but they've deliberately clicked on that link that they shouldn't have clicked on to invite the malware in. So, look, I know that's not going to happen all of the time, but I do think that the remote working adds another layer of difficulty, certainly for the employer.
Because some of the emails are quite convincing. We get phishing emails, and as soon as somebody has joined, they get a phishing email that looks like it's come from me. And they're not very sophisticated emails. And I usually don't ask people to do things like that, but the emails come in and it's quick. Yeah. It's probably automated, but they're watching.
Well, whenever we have a test, I always click on them, the ones that I'm not supposed to. And then my phone rings and IT said,
you don't click on any of the others though, right? Good.
Just the ones when it's a drill.
A test. Absolutely. Test. Of course. Yeah. That sounds plausible. So the monetary value of data, Emma, why are they bothering? What's the driver? And actually, so you've got some different cases there. I'm not sure Mr. Skelton and Morrison's, it was a financial driver per se. It was retribution there. But and then LGT Vestris, if I can drag people back to 2005, that was handing over account data and tax data to the German Revenue Service, I think. That wasn't motivated by cash, although they may have been paid for it. I'm not sure. So how do we? Why are people bothering?
Well, there's two aspects to the value of data. The first is the value to those who steal it. Apologies. It's the value to those who steal it. To give you an example, there is a black market price per nation for personal ID, particularly financial ID. One of the highest prices paid is $25 per head for any Japanese personal data. And that's because they have very good credit ratings and credit histories. So, I mean, they're very valuable for fraud. The other aspect of the value of data, and again feeds into ransomware, is that the value of data in the eyes of the law is rising at quite an exponential rate. It used to be that data was an intangible. It had no value. When you lose it, you don't lose anything. It's not like losing a £5 note, for example. But actually the courts, and that's through the privacy cases to do with phone tapping, have said there is a value to be attached because you're extracting a value through the data when you sell it to a third party or when you put it into a newspaper. So actually we need to compensate people because there is something of value that has been lost. So it isn't the data that has the value, it's the loss of the data that has the value. And there's a case going through the Supreme Court at the moment where the value has been placed at £750 per claimant. Now, in that claim alone, there are 4 million claimants.
Is that Lloyd?
That is Lloyd and Google. Okay. So I won't go into too much detail now, but I mean, you can really see how that, legal fees aside, is a fatal amount of money for almost any business. Even for Google, it's a significant dent. So the value of data is on the rise for both criminals and for you. Yeah. Well, hopefully not just me specifically, but everybody. Good. So we have a number of questions, which I think maybe we do the questions now, and then in the wrap up, we could cover off what this means for the future, where this is going, and go around the houses if that's okay. So the first question, and these are related to what we've said already, why do we feel that the UK has lagged behind in terms of developing cyber security measures and cyber insurance? I think, Dan, that's related to your publishing experience back in the noughties, if you want to take that one.
Yeah, so what my understanding is that the US, for a number of reasons, have always just been ahead of certainly the UK in terms of cyber. I think that's partly to do perhaps with, having bigger industries, but they were much more sensitive before we were to the impact of cyber attacks. As I say, they certainly developed the cyber industry before we did, cyber insurance industry before we did. And as a lawyer, I can tell you as well, we were quite slow in the UK to develop any idea of, if you like, cyber law. Which is a field I specialize in, but you already have publications in the US that have taken shape. So I think that may be, I think we Brits love to think that we're a huge former empire, but we are something of a postage stamp of a country in modern times. So I think it's probably the scale of industry in the US, and as I say, and perhaps also perhaps in terms of IT, they were probably also more developed than we were too.
We're moderately less litigious, I would venture. So there is, everyone lawyers up a bit more quickly in the US than they do here as a nation.
Everyone has a lawyer and a psychiatrist, yeah.
Yeah, sometimes it's the same person.
The other way.
Yeah. Jonathan, just to add to that, there's a geopolitical reason that the US was ahead. That one of their sort of biggest adversaries come in Russia and China. And one of the key ways, given the geographic distance between those countries, is digital attack. They were a target perhaps before or on a greater scale than we were. So they prepared adequately for the same. You only have to look at the corporate espionage that the US falls foul of and the origins of the same to understand why they really sort of attacked this problem before we did.
I remember they lost the vetting agency's data, what we would call the defence vetting in the UK, and it was OMV or something, that they lost the whole thing, and it got walked out by a contractor on a laptop, which is careless, arguably. And I think they're still cleaning up for that, because people are having to move house and all those good things to protect themselves. So the next question, how do the panel feel about the increasing complexity caused by sharing personal data with both public and private organizations, and how does that affect defining and limiting liability? And the case that I think we should probably look at is the upcoming sharing of NHS data, even in a pseudo-anonymous way. Somewhere in the autumn, it's going to be shared between NHS Digital and private sector actors to gain more value from the data and discern more trends. Can I ask, we'll start with Emma, if I may, how you feel that the increasing complexity of who do we share it with, and also who works for who? So am I sharing my data? One of the things I even have a challenge with is, am I sharing it with a brand, or am I sharing it with the parent company? And what's the relationship between the two? If I don't like the parent company, but I think it's a brand, I've just given them my data. We really need to be clear on where it's going and who owns it.
I think that's a really high administrative burden for the NHS in particular, who are already so burdened in every other aspect. And my first comment would be it was probably a mistake to rely on the GDPR basis of consent. Consent can be withdrawn or changed, amended at any time. And I think it wasn't well thought through at the time that there were so many other legal bases they could have placed this on that would have got rid of this problem in its entirety, as we do with security vetting, etc. I think GDPR in the pandemic is going to be very, very difficult to adhere to for the NHS. And I do foresee that there is going to be a problem when they start to lose control as data controller of your personal data and who exactly it's going to be shared with, because ultimately it is with them that you gave the consent. It is going to be problematic. And I do wonder whether the legislature will step in to perhaps curtail their obligation in this very specific context. It remains to be seen, but yes, it is going to be very problematic.
They'll also have to bring the curtain down there, won't they? So Palantir got involved quite early on in trying to map the coronavirus pandemic inside the UK and hospital burden rates and where the oxygen was and all that good stuff, which is an amazing feat. But should they keep it? Should they anonymize it? Where do we put the data later? So yeah, they may put a limit on the obligations, but the ICO are still going to be watching quite carefully for how we come out of the pandemic, I guess. And prep for the next one, because it's unlikely that it's the last time that I get to spend 6 months in my house with my kids. Dan, do you have anything to add to that before we've got another question? So,
I mean, the only thing I'd add to that as well is often we're very stuck on the GDPR. And I think we just need to understand that sure that whilst that applies to the UK and to the European perspective, it's not always the global picture. So that's the other thing, by the way, about sharing information. What people often forget is, when you talk about cyber now, it's a borderless world, and information moves very quickly and across states, and not all states take the view that you as the individual are paramount in the picture. That's another thing. I mean, one thing that always kind of upsets me is you'll have these publicized, cyber attacks or breaches where data is stolen from, globally, and very often nothing at all is done about it. There's provisions in the GDPR that say, for example, if you have states that are outside Europe that are kind of monitoring European citizens stealing their data, that situation is actionable, but the regulators never actually seem to action it. So I think what I'd kind of come back to is, I'm afraid the reality is that quite often you are trusting those organisations to treat your data with the care that it ought to be given, and that's
binding corporate rules and bits and pieces to try and build a corporate view of where it sits and who can see it.
I mean, so I spent a lot of time looking at sort of because when the GDPR came in, everyone thought this is going to be this homogenised, all-embracing law. And it kind of wasn't, because some nation states said, actually, no, we don't we don't think the individual and their, that they have sovereignty over their data. Russia, China, those countries said, well, no, actually the state is sovereign. We own the data that's within our borders, and we'll give lip service to rights of citizens. But actually, if we have data in China or Russia, it's ours. And then you had the US, which, you have, say, states like California, which are much more liberal leaning and moving towards, they have a sort of a GDPR plus regulation system there. But on a federal level, the US, they were always much more in favor of big business. And they knew that big business operated with data. So they didn't want to go to war with those, so in the US, big businesses had much more power in terms of what they could do with your personal information. So
I have a final question, sorry to talk over you, which is, what can an organization rather than an individual do to prove that they're doing well? An example, the thing that triggers this, I don't know if you guys own cars, but if you have a car and you have car insurance, I've noticed my premium's gone down by 35% because last year very few people were crashing into each other because we weren't allowed to go anywhere. And so I imagine this is a bit of a hedge before the insurance companies publish their financials and show that actually they took quite a lot of money and they didn't pay any out. My premium's gone down by 35% to renew last month, which is great news personally. How does a company do that for their cyber insurance, business continuity insurance? If they did really well and they just carried on trading from their houses and now they're going back to work, that should also be recognized, presumably, and the premium should reflect businesses that are mature in InfoSec and data privacy and organizations that pay it lip service. Difficult to differentiate, but Dan, can I ask you to have a go at that one first?
Yeah, so this probably isn't the answer you want, but this is one of the abiding problems for cyber insurance, because it's quite difficult. So if you turn it around and look at it from the insurer's perspective, it's quite difficult for them to gather reliable intelligence in order that they can kind of fathom how safe you are. So obviously, if you have credentials to cyber secure, or you have credentials to show you've got kite marks, you've taken steps to be diligent, that's going to help. And obviously, if you have lots of policies and you can set things out in a very convincing manner, but going deeper than that, this is the problem for the insurer to really sort of differentiate between the company that's a higher risk than the company that's a lesser risk. And another problem for that is also the nature of the beast, because if you look at cyber
or B2C or whatever, yeah.
Well, also if you look at cybercrime doesn't stagnate. It's cyber criminals are entrepreneurial. They're constantly looking for an edge, for a way to cause you pain, to make a gain, to keep ahead of law enforcement. So that means that so at the moment the noise is very much about ransomware, but that could kind of change. So that's the other problem insurers have. It's not just looking at the here and now and whether you can cope with that risk. We've just heard about the pandemic and remote working. What's around the corner as an insurer? Where's the next kind of big cyber attack? Where's the claim? Where's the claim?
And who do we blame?
And who do we blame? And how do we stop this tidal wave of aggregation? If it all goes wrong, because that's the other thing as well, because the claims have such potential, in terms of the capacity to be huge. So
sorry to interrupt. What does this mean? We've got 5 minutes left, so we'll do a couple of minutes each, if that's all right. Where do we go from now? What do you think will happen in the next 2-3 years? We've got a pandemic to learn a lot of lessons from. Inquiries notwithstanding, businesses will be learning their own lessons and putting in place things like insurance on particularly business continuity, I'd venture. What needs to happen? Emma, can I ask you to kick off?
Absolutely. I think we all need to get used to the new normal. I think that's the first step. Flexible working for many businesses is here to stay. And we've all seen the benefit of perhaps getting rid of expensive real estate in cities and having a more remote workforce. it means we have to get better at things that perhaps weren't at the fore, not just cyber, but things like culture, looking after our people and making sure that we go some way to actually evidence that. As you've mentioned, that is the big thing. What are we doing to challenge the risk? On the back of that, what is our risk? What risk do we face in particular as a business? By that, I mean, if we do see from Lloyd and Google that there is a rise in class actions, you need to look at yourself and understand, am I a business that is likely to be affected by an increase in class actions? Do I sell tickets, for example? Am I an airline? Do I sell software as a service, for example, and an incident has occurred whereby customers might have been affected by something that I did or didn't do in years gone past? Because the risk is changing moving into 2022, and we all need to be prepared for that.
Okay, no, that's interesting. And what are the tangible steps that they could take early on? So if I'm a business that's B2B or even B2C, and I've got lots and lots of data, one of the challenges is the business isn't always of a scale that they have a CIO, a chief information officer, or an information security officer of their own. They might subcontract it out to a fractional service, or they just don't have anybody. And the guy that does IT and supplies the laptops also does security. But we're moving into an era where some more rigor is required, I would venture.
Absolutely, I completely agree with that. And on your first point, you always have to ask yourself, do I need all of the data that I hold? Do I need to relook at my privacy policies? For example, do I need to keep data for 6 years, or is that completely disproportionate for my uses? Keep the data that you need to. I always refer to data as nuclear power. It's great when you've harnessed it, but when it goes wrong, it is toxic. And you need to make sure that what you have is all that you need and not more. And then prioritize cyber. We know that 92% of CEOs are prioritizing it, but really talk about it. Make sure that individuals are adequately resourced, because this is, a prominent risk within your business, and it should be at the fore of your mind. So make sure that you are taking it seriously and not just doing the bare essentials to get by. Whatever you do, document and share it with your insurer, be it through accreditation or just open dialogue with the underwriter or your broker. Be honest.
Okay. Interesting. Dan?
Yeah, so I think that you need a package of measures. So, and in terms of when you're looking at your assets that are at risk, perhaps what you ought to do is to say, okay, what do I hold that's most valuable? So if you're looking at your data, if there was to be a cyber attack, what are the crown jewels of my business? So you look at those. You look at how well protected they are. How replaceable they are. If you assume that there's no perfect defense to an attack, you then have to say, okay, what can't I afford to lose, and how do I cover that off? The other thing I'd say as well is that you're then looking at a package of measures. So cyber insurance is just one part of that, because if you just assume that you're insured and therefore all your losses will be covered, you could be crying after the event when many of those losses are denied. So cyber insurance, again, take a very rigorous approach to have a look at what your policy, what does it cover, what do you think it covers, and get a view as to what it actually covers. And then also look at your defenses. So I'll be very quick. So your tech defenses, but also your other defenses, which are cultural. If you've got remote or hybrid work, yes. And culture, and if you're going to embed a security conscious culture, because that's the other thing, make sure that that you're not. I mean, lawyers love policies, and policies, they draft them and they circulate them by email, but that's not enough with people. They've actually got to believe. If you're trying to embed a culture, they've got to believe in what you're telling them, especially if it's something you want them to do at home outside the office, which is their private space, right? It's got to be more convincing. So I think it's a package of all those things. And ultimately, as I say, if you're looking at some sort of safety net in terms of insurance, review your policies, and see what cover you've actually got and whether that might need to be supplemented.
Does it say on the tin what you want it to do? Yeah. Okay.
Yeah. Exactly.
Well, thank you both very much for joining. next week we're looking at brands and the luxury fashion game, which is very B2C and very data heavy, getting even more that way. So it'd be good to see you there in the audience as well. Yes, so Dan, Emma from HR Law, thank you very much for attending, and thank you everyone on the call in this half term. Great.
Thank you, Jonathan. Pleasure.
Thank you,
Cheers. Bye.